Good evening, traders and investors. Will back here with another one, coming to you with a Friday and weekly market recap. Hopefully you guys had a great week in the markets and that you're off to a very nice start to the weekend as well. I'm filming this video very late on a Saturday evening. My apologies, was busy with friends and family yesterday and today, but I'm here now and we may as well get this video done. So thank you guys for your patience. Now, in terms of Friday action, well, we had a very nice day all across the board. The SPY, the QQQ, and several other major sectors ending in the green. Matter of fact, the QQQ is hitting a brand new all-time high by just a couple pennies. The SPY, not quite there yet, but one thing is very clear. Investors and traders bought the dip very heavy as a result of the Friday, 2 Fridays ago, when we had the big dip after the non-farm payrolls. Now, although the macroeconomic landscape remains a little bit challenging in terms of the potential impacts from the tariffs, in terms of the new job creation in the economy slowing down a little bit, we do also have some very good things underway right now. Number one, company earnings. They, for the most part, were extremely strong. Revenue numbers were good. EPS numbers were good. Not many companies were missing. I know we had some fairly awkward drops in the markets after some very good reports, such as the report from Netflix or Amazon or AMD or even ASML, just to name a few, where they showed really good numbers, but for some which reason, Wall Street was just dropping the stock prices after their earnings. As a matter of fact, speaking about earnings here, guys, well, we know that right now we are pretty much through the bulk of the earnings season. Matter of fact, 90% of the companies in the S&P 500 have already reported. The week that we're coming into right now, August 14th, has some very small companies reporting earnings, but for the most part, we are through the bulk of earnings season. So we need to determine, how was the earnings season? Were companies nervous about the macroeconomic landscape? Was the consumer an absolute disaster in terms of their spending or whatnot? And how was the guidance? Well, we have some research here by FactSet showing that, as a matter of fact, for Q2 2025, 81% of all companies in the S&P reported a positive EPS surprise. Additionally, 81% of those companies also reported a positive revenue surprise. So EPS and revenue were quite good. So although some of the moves during earnings season might have been a bit confusing, the underlying fundamentals of the market were very strong. We heard that the consumer was pretty strong when we looked at earnings reports from some of the travel companies and also from major banks and also major credit cards, which have a bunch of consumer data. We also know that the big tech earnings were very strong, even though they had a little bit of CapEx estimates that were slightly above what people were expecting. Overall, those companies show that they're powerhouses, generating record revenues and record profits alike. Let's move a bit further here and determine, well, are these companies nervous about the future? Well, as a matter of fact, no. 87% decline in S&P 500 companies citing the word recession on earnings calls for Q2 compared to Q1. We know that Q1 was a very tumultuous time in the markets. It was the whole tariff situation. A lot of companies were either pulling guidance for the full year or just saying that, it might just be a bumpy ride for 2025. That has now changed, right? 87% decline here. The term recession was cited on only 16 earnings calls conducted by S&P companies during this period. This number is well below the 5-year average of 74 times and below the 10-year average of 61. That's a big drop, guys. Only 16 earnings calls we had the word recession. In fact, this number reflects a quarter-over-quarter decline of 87% compared to Q1, where the term recession was cited on 124 earnings calls. So all companies in Q1, not all of them, but a good portion of them, right? Call it a quarter of the entire index, was a bit nervous about the possibilities of a recession as a result of the tariffs. On a percentage basis, the term recession has been cited on just 4% of the 442 earnings calls in the S&P 500. So apparently, companies at this stage in the market are not very worried about a potential recession. Is the macroeconomic environment a little bit challenging? Yes, but that is not synonymous with a recession, all things considered, right? So in terms of today's video, we are going to do a few things together. Number one, I have a few last earnings reports to present to you guys, and those are going to be from the following companies that had earnings just last week. We're going to cover Duolingo, we are going to cover McDonald's, and we are going to cover Fortinet being down almost 25% after their earnings reports. So we do have a host of other companies that reported earnings, most of which we did cover last week. But in the event that I find some time this week, because this week we don't have too much. This week we only have, a couple of the very hype plays like ASTS and, Kava, Rigetti, some of the quantum computing names, right? The bigger ones, though, CoreWeave and Circle. We'll definitely look at these over the course of this week. Then on Thursday, another big day, John Deere, New Holdings, Applied Materials. But for the most part, though, guys, right? Not too many very large companies reporting, so maybe I can fit a few more companies that we did not cover last week. Some of the interesting ones, like possibly Symbotic, possibly Oscar Health, possibly reviewing Disney and Novo Nordisk. Maybe I can do a little bit of catch up into this following week, right? But today we're going to focus on Duolingo, Fortinet, and McDonald's. After that, we will do our regular rundown of technical analysis on our major market indexes, and then we're going to do the same thing on this tech list right here, determine whether or not there's some good deals to be buying, either for swing trades or for long-term portfolio opportunities. After that, we will do a rundown of the biggest gainers and losers of the Friday session. There were many companies having some very nice gains on the Friday session, but also on the flip side, many companies coming down double digits into the red. So we'll explore a bit of the companies on this list and derive any possible trading or investing opportunities. And lastly, we will do a quick review of my portfolio for some of the trades made this week and which ones I'm keeping into next week overall. Just to sum it up here, guys, it was a pretty decent week for us. For the wheel, some assignments on which we wrote some covered calls. For the most part, the earnings trades were very good. And then sadly, at the very end of the week, I did play Trade Desk. And sadly, this loss on Trade Desk kind of erased the last week of earnings profits for me. But earnings is always a gamble. It's a casino. They're always bonus plays, which is why I label them lottery trades. But for the most part, the bulk of the strategy here was performing well as per usual. So we'll recap the portfolio and which positions I have remaining into the rest of the week at the very end of the video. And that'll be it for today. So without further ado, let us jump right into the action, shall we? SPY up 0.78, the Q's up 0.93, hitting a brand new all-time high. The heat map was actually quite good. So take a look right here. Most of your big tech names having a very good day. Shout out to Apple. Apple's up 14% from some of the lows. And you might remember that I was saying at the lows after earnings, Apple was a tremendous buying opportunity. And you might remember me hinting on the channel that calls, especially leap calls, were probably a good opportunity, right? This is my leap call position that I opened on Apple just about a week ago at this point, 2 weeks ago. And we're currently up almost 50% on that call option position. So congratulations to any of you who were able to get into that trade as well. In terms of the rest of the heat map, financials coming back a little bit. Healthcare struggling, only Eli Lilly down in the red, but, it's still a very mixed bag. So although the Friday session was pretty good, healthcare, in all reality, didn't have too good of a week, right? You take a look at the 1 week relative performance here. It was dragged down by Eli Lilly, down almost 18%. We had a mixed bag. Some companies were doing well, but other ones still just lagging behind the overall market. The bottom half of the market as well was somewhat mixed. Real estate taking a bit of a dip. Utilities did as well, as we had a slight little uptick on yields. Consumer defensives, not too bad. Walmart and Costco coming back in a really big fashion, guys. Look at this breakout by Walmart, looking very good. And even Costco, which had been down almost every single week for the past 2 months, having a very nice end to the week. So getting a little bit of rotation back here into some of the consumer defensive names. Overall, though, guys, not a bad day and not a bad week in the markets. 1 day relative shows that even better to where most of the market was higher. The only things getting left behind, real estate and utilities. On the 1 week, well, we started it off Monday, Tuesday, and Wednesday, guys, not too good. You might remember this heat map right here. A lot of your major sectors were red. And I'm happy to say that by the end of the week, there was a very nice recovery factor in play. Basic materials, technology, communication services, defensives, and cyclicals all contributing in a very nice fashion to the upside here for the overall markets. Only healthcare and energy getting a bit left behind. So before we get into more technical analysis, guys, let us dive directly into those earnings presentations. And we're going to start off with one that has been requested on the channel a few times now. We're going to talk about Duolingo. So Duolingo, guys, was a wild week for this company. They reported earnings, and immediately after their earnings, they were up 19% in the after hours. And then coming into the next morning session, all the way through the open, guys, this company was up a whopping 34%. However, we gave back a lot of the gains that very same day, and then even into Friday. You might be asking yourself, how can this company go up 35% and then unfortunately give it all back? It was this piece of news right here. The way you travel is about to change. Meet ChatGPT-5. And this is one of the concerns that sometimes people have with Duolingo. The fact that with all the AI chat applications and real-time translation services, well, do people really need to be learning new languages on Duolingo, right? Are the LLMs essentially going to remove some of the business from Duolingo, which is a fantastic company? And that news right here kind of scared investors away a little bit because, I mean, there has been translation services on the LLMs now for approximately a year. Google's been doing it. ChatGPT was doing it with text, but now they're doing it with voice and video as well. And that kind of spooked investors, which is why you have this decline. But this decline might just be a buying opportunity because even though the LLMs are providing translation services in real time, that's not really why people use the Duolingo app. So let's get into some of the numbers, guys, and you'll see they absolutely crushed it. Take a look at the EPS right here, beat by 55% against the estimate. That is a blowout and a almost 5% beat on revenue. Here are some of the easy numbers. Revenue was up 42% year over year. Daily active users was up 40% year over year. Adjusted EBITDA margins up and to the right, which is exactly what you want to see. The company is scaling the top line revenue and bringing a lot of that money to the bottom line in the form of profits. Paid subscribers, 36% year over year. Very strong right there. They run a freemium model, right? So you can do a lot of things for free on Duolingo, but then they kind of paywall you if you want to have the full access to all of the features. Adjusted EBITDA up 64% year over year. They absolutely crushed it here, guys. Let's take a look at some of the earnings highlights. So Duolingo stock skyrockets 14% on boosted guidance as AI powers users' growth. So moving on further, the language learning platform boosted its guidance due to strong user growth driven by AI. Increase on the guidance as well. The mobile learning platform hiked its full year guidance to about $1 billion, up from a prior range of 987 to 996. So not too large of a guidance uptick, but that was enough, and Wall Street absolutely loved it on the day of earnings. Here's what the CEO had to say. We exceeded our own high expectations for bookings and revenue this quarter and did it while expanding profitability. Daily active users jumped 40% to nearly 48 million people from about 34 million in the year ago period. Duolingo has had some very strong growth metrics, guys. Take a look at this right here. The overall yellow line right here is total revenues. They make numbers, they make the revenues from subscription fees to the platform, of course, but they also make a decent chunk of revenues from advertising. That's why you'll see a difference here between the yellow line, which is total revenues, and the orange bars right here, which are subscription revenues. You can see that everything is going up and to the right, very strong, and monthly active users is the purple bar right here. You can see that Duolingo has been seeing an increase in monthly active users every single quarter almost for a better part of the last 5 years. And keep in mind, these large language model translation services have been around now for over a year. You would think that if they were able to disrupt Duolingo's business, you would have already seen it in the numbers. You'd have seen it in some revenue slowdown. You also would have seen it in either the monthly active users or the daily active users that the company both reports. So far, though, no. So it raises the question, right? People that use live translation services, are they the same target client that wants to learn a new language? The answer, quite frankly, is no. Let's move further into it, shall we? Moving on further, in an effort to expand its course offerings and boost users, Duolingo has implemented AI tools, including a video call conversation practice feature for some paying subscribers. Duolingo also announced the acquisition of London-based music gaming startup NextBeat for an undisclosed amount, as it looks to broaden its app products. It's been doing a good job so far, not only offering language learning services, but now also chess and even mathematics. The company's CEO said Duolingo is still in the early stages of its growth trajectory. Revenues were up 41% year over year, and which beat the Wall Street estimate, of course, as we saw. Net income grew 84% from a year ago to 45 million. Net income for Duolingo, guys, is a very strong number overall. We're going to be looking here at net margin numbers of, let me just bust out the calculator here. I should have done this before, my bad. 45 by 252. Very strong, guys. 17.8%. Their margins are expanding in a decent fashion, right? If you take a look here at the financials, the company wasn't always as profitable as it is today. You may see here that net income margins were negative all the way through 2023. And now the company is driving more money to the bottom line, which is very strong. They have very high gross margins, being a software as a service company. And that's what you would expect. Very high, low 70% gross margin. Operating margins have been getting better over the better part of the last 4, 5, 6 quarters, and they're bringing more money to the bottom line. Now their net margins are roughly in the teens, and this time again, they did not disappoint with these very nice, almost 18% net margins. Moving on further, for the third quarter, the one coming up, Duolingo projects revenues between 257 and 261 million, which was also above the analyst consensus for the forecast. So, raising guidance on Q3, raising guidance on the full year, and also beating the revenue and EPS for the current quarter, all things that led the company to move a lot higher after that earnings report. Now, moving on further to some other analytics, you can see that paid subscriber penetration was about 8.6% a year ago. That is now up to 9%, meaning that of all of these daily and monthly active users, how many of them can they convert to full-time paid members for the premium services? And you always want to see this number upticking. That is very good, guys. 10% for a freemium model to be able to convert 10% of its users into premium users. That is a very strong number, and it is going up and to the right in the correct direction. Now, moving on further, some more highlights of the company. Our new chess course has grown faster than any other subject we've launched, including language learning, with over 1 million daily active users as of the quarter end, which is very strong. Now, monetization and subscriber growth. One thing that this company does very well is they gamify the experience of learning. We saw their super tier grow above our expectations this quarter, driven by strong conversion. At the same time, Max, our highest subscription tier, has seen significant traction since fully rolling out less than a year ago. We're excited that now we have research that shows that Video Call, the flagship feature for Max, is helping learners improve their speaking skills. We also made progress this quarter on a new core feature designed to boost engagement and conversion, and they call it Energy. It's a bit of a gamified experience here. Now, Energy is a pacing system for free users that replaces Hearts. Unlike Hearts, which penalizes mistakes, Energy is a usage-based and rewards success. Each exercise uses a unit of energy, regardless of whether the answer is right or wrong, but learners get back energy when they get multiple answers correct in a row. This creates more motivating and gamified experience, especially for new users who tend to make more mistakes. So, meaning you have an energy bar right here. If you get an answer wrong, it goes down. You run out of energy. Unfortunately, you just can't learn anymore. It's kind of like a game, right? A turn-based game type of thing. Very strong business model. And let's just say you are either a premium mid-tier subscriber or a free user. Well, if you want to progress a little bit further, but you don't have any more energy left, what can you do? Well, there's a little button down below and you can watch an ad. So that's how they get you to watch the ads. If you guys have ever played mobile games, you know exactly how this freemium service works, right? The iOS rollout has shown that it increases daily active users, the fact that they've moved to this energy system right here, median time spent learning well, and subscriber conversion. We have rarely ever seen a feature move more than one of these metrics, let alone all three. We see a meaningful opportunity to iterate on this mechanic over time, much like we've previously done with Hearts and Streaks. So they're tweaking their app to make it more immersive and focused on learning, right? You obviously do not want to run out of energy, so you will force yourself to not make mistakes. Maybe when you're practicing these lessons, you're writing things down rather than just moving through it kind of like aimlessly, right? So they really want to focus on the learning experience. That is why I read you guys all of this stuff, because if you're studying the company and how they're trying to convert these conversions and how they're retaining users on the platform, you need to understand the mechanics of how the app actually works. It builds upon previous successful apps, especially in the gaming niche. And the company is definitely taking what they're learning from the gaming niche and applying it to their language learning experience, which is very strong overall for the company, right? So Duolingo, very strong company, very good earnings report. I like what they're doing in terms of trying to monetize users, trying to get users to be more engaged with the platform, focus on learning, the new energy system. All of that really screams one thing to me, and it screams customer retention. As a result, I do not believe that the language models target the same target demographic, right? It stands to argue if you only want something to be translated, you're not going to go on Duolingo anyways. You'll just go on Google Translate, or you're going to use ChatGPT or Grok or any other host of services. No, Duolingo is actually for people who want to learn a language, either to be able to converse with friends, with family, or when they travel. They want to have a more immersive experience into a different culture. As a result, the target client for the LLM translation services versus Duolingo, I don't think there's an overlap there. As a matter of fact, if there would be an overlap, as I said, you would see a notable decline when all these translation services started about a year and a half ago. But we're not seeing that right now. What I see is a very strong company that is expanding margins in the right direction. I also see a company with a very strong balance sheet as well. I mean, the company doesn't have any debt to speak of. They're sitting on a bunch of cash. They generate a lot of free cash flow because they're now very profitable. And in terms of the earnings forecasts here, they're looking very good, expanding EPS at a rapid clip and expanding revenues as well at a very rapid clip. Keep in mind, guys, by the end of 2028, they'll almost 2x their revenues again. It gives them a very attractive revenue growth rate of 22% per year and an extremely attractive EPS growth rate of almost 42% per year. So the question remains, is this company a buy at $370? Let's have a look. Forward price to earnings is 114, but without context, well, you can't make so much out of this number other than saying that it's high. Keep in mind, they're growing EPS at 41.5% per year. When you divide this by this, you get a PEG ratio of 2.76. It is on the high end, but it's not that bad considering the growth metrics of the company. Price to sales remain at 16.9, which is the higher end of tech, but the company is growing well. And while the company is growing at these rates for the next 2-3 years, I do believe that Wall Street will allow it to trade at these relatively high valuations, right? That being said, after the earnings pullback, is it a buy? I actually think that there's not a bad opportunity here for a buy, guys, whether it's a swing trade or even a longer term portfolio position. If you're trying to go for the maximum acceleration of revenue, profits, free cash flows, and earnings per share over the next 2-3 years, there could be a longer duration swing trade in this business for you, just buying some shares now that we're back into support 370 to 329. But also, if you're looking to build a bit of a swing trade position, we clearly recaptured a nice level right here. And there's a nice, clear defined stop loss area, 330 essentially on the daily. So that being said, stop loss will go below there, and then you're just looking for the bulls to kind of recapture this. Your take profit at the end of the day might be all the way back up here, 523. There is a very attractive risk to reward profile for this trade. We've now recaptured the level, recaptured a few moving averages. So although we've given back a lot of the earnings gains, the earnings releases were obviously very good, and I do not believe that the large language model competition poses a near-term threat for this company because the customer demographic is a little bit different. So that is everything I had for you guys for Duolingo. Hopefully you guys enjoyed that. Now let's move into company number 2, which is going to be a bit of a switch gears here. It's going to be McDonald's. So a bit of a slower company, but a company we have to look into because we want to ascertain, is the consumer still doing okay? You might remember a few weeks ago, we looked at Chipotle and they were complaining same-store sales were down by a large margin there, and this company was trading at a very high valuation. So is it the entire restaurant business that is suffering, or is it maybe just Chipotle? Well, let's take a look at McDonald's, shall we? McDonald's such a strong company, man. They beat on EPS 1.45% and they beat on revenue by 2% as well. You might remember last quarter's earnings when we covered them. You had a headline like this: McDonald's reports largest U.S. same-store sales decline since 2020. This was all the way back in May. What about this time around? Well, McDonald's sees U.S. sales rebound, but concerns about low-income consumers linger. And if there was one takeaway from this entire earnings season, whether it's the travel companies that were saying this, the credit card companies that were saying this, or now even McDonald's saying this, right? This is pretty much this earnings season summed up in one single sentence. Sales are rebounding in the US across the board for most people, but there still are some lingering concerns about the lower income consumer. Let's move to the report, shall we? So the company topped analysts' expectations as buzzy promotions helped its US restaurants rebound. Some of the easy numbers for McDonald's real quick. Revenue was up 5% year over year. Earnings were up 7% year over year. And this company is so good at driving profit margins to the bottom line. You can see that their operating expenses only went up 1% year over year, and that is against a revenue increase of 5%. McDonald's is such a legendary company. Yes, it's a fast food chain, but keep in mind it is a franchise model. McDonald's has extremely strong net margins for a few reasons. Number one, it's the franchise model. They collect a lot of franchise fees, but they also collect a percentage of sales revenues from these restaurants. Keep in mind, McDonald's does not own 90% of all restaurants that bear its brand. It only owns about 10% of them, and they're in the best locations. Kind of the same business model as Hilton and Marriott, some of the two largest hotel chains on the planet. This is what allows McDonald's to really get those magnificent net income margins as opposed to a company like Chipotle. So their margins definitely do protect them, and their business model protects them even when the end consumer is a little bit weak, right? Despite the chain's improved performance this quarter, executives are still worried about the economic health of the low-income consumer. McDonald's is now working with its US franchisees on ways to make its core menu items more affordable beyond the $5 meal deal it rolled out last summer and the newer Daily Double Burger promotion. When McDonald's was faced with some challenges last year, such as consumers not eating out as more, not visiting its restaurants anymore, well, they threw out a bunch of promotions. They can afford it. They have the margins to do it. And it has done a good job of re-attracting some of those consumers. Re-engaging the low-income consumer is critical, as they typically visit our restaurants more frequently than middle and high-income consumers, said the CEO. This bifurcated customer base is why we remain cautious about the overall near-term health of the U.S. consumer. Now, net income was very strong at $2.25 billion. Another quarter, guys, of extremely good margins for McDonald's. 32.8%, which was better than Q1 at 31.4%. Moving on further, same-store sales, a metric that only tracks the performance of restaurants that have been open at least a year, increased 3.8%. This is the chain's biggest jump in nearly 2 years, and a very big contrast in relation to Q1, guys. Q1 same-store sales was a decline of 3.6%. This time up 3.8%, and in the US alone, 2%. Very strong numbers, and does show the company is benefiting from a bit of a rebound. Let's move further. McDonald's US restaurants saw same-store sales growth of 2.5%, reversing 2 straight quarters of domestic declines. The burger chain outperformed its rivals both in same-store sales and comparable traffic. So shout out to Chipotle. McDonald's apparently still the absolute king of quick service restaurants. Certainly, overall traffic in the US remained challenging, talking about the entire quick service restaurant demographic, as visits across the industry by low-income consumers once again declined by double digits versus the prior year period. Shortly after the quarter ended, snack wraps returned to the menu for the first time in 9 years, and executives said that the early results are encouraging, and franchisees have voted to maintain the $2.99 promotional price throughout the end of the year, once again resorting to promotions to re-attract that low-end consumer. Outside of the US, demand for its Big Macs and French fries was even stronger. Here's what he had to say, the CEO. I would just note, also in our international side, it's not as competitive as a market as it is in the US. Basically saying nobody really challenges us abroad. I think it's a little bit easier for us to stand out and represent good value in international. The chain's international developmental licensed markets division, which includes Japan and China, reported same-store sales growth of 5.6%. That is very strong numbers, guys. Anything above 5% for same-store sales in quick service restaurants is an extremely strong number. Chipotle had that for a while. Sadly, they do not have that anymore. Its international operated markets, so the more matured international markets, saw same-store sales growth of 4%, thanks to gains in countries like the UK, Australia, and Canada. Executives said McDonald's value and affordability scores from consumers have improved in key markets. So McDonald's showing why they're one of the industry chiefs again. Now, I do realize that this company is not for everybody. It's not the stock that grows the fastest, but it is an extremely resilient business model. And depending on the type of company that you prefer, I know some of you only want the fastest growing growth companies in the world, but I do think that McDonald's does hold its place in certain people's portfolios, certain people who are looking for a bit more value and defensive names. This is probably one of the best companies on the planet for that specific niche. Revenue growth and EPS growth are very stable. It's not a fast-paced growing company anymore, but what they're able to do, they always keep extremely high net margins. They always deliver very strong cash flow. They're always opening new restaurants every single year. And what do they do with all those profits? Well, of course, they buy back a lot of shares. Their shares outstanding count goes down and down and down and down every single year for the most part. And they even pay a decent little dividend of about 2.32%. Now, McDonald's is a bellwether for all economies for the most part here, guys. You can see that it's very rare, other than COVID, when the restaurants are closed. It's very rare to find some years where McDonald's EPS actually goes down and where revenue actually goes down as well. It is just stable, steady, up and to the right. Definitely the king of quick service restaurants right now. At the current price of $305, is McDonald's a buy? Well, for the portfolio that would like this type of company, I do believe the answer is yes. McDonald's is a buy here. It is even a buy if we dip back down into the 280 range. Matter of fact, I was playing this one a decent amount with my Discord group down in the low 280s. The forward price to earnings ratio at 305 is about a 24.71, which is average. It's not cheap. It's not expensive for the business. It's just average. The free cash flow yield here at 3.09% is the same thing. It's not cheap, or rather, it's not good, such as it would be back here in the month of July of 2024 when the free cash flow yield was over 4%. That was a screaming buy. This is still just a dollar cost average buy into a fantastic company. Nothing wrong with this company. They're able to get through so many different economic cycles. They're tried and tested. Overall, in McDonald's, I'll leave you with one thing. You might not enjoy it as part of a long-term portfolio, but I'll leave you with one thing, which is something that I rarely do, rather show my, the secret trading tricks for this business. When you can bid into daily oversold, guys, especially into the 26 monthly in the EMA, look how many times historically, when McDonald's comes down into its 26 EMA, other than during a global pandemic, when it comes down into its 26 EMA, I want you guys to focus on one thing and one thing only. If you're trying to trade this name, look for oversold conditions, okay? So McDonald's on the monthly here, you can see tested the 26 EMA, 285. I'll leave the arrow there. This is literally daily oversold conditions. McDonald's, whenever it hits daily oversold conditions, and you can find it in combination with the 26 EMA, it is usually a decent time to fire off some shares, to fire off some longer duration call options as well, and then you just let the market do its work. If the market historically buys those locations, sometimes it can take a few days or a few weeks to turn around, but it usually always does. That is traditionally where Wall Street finds some value in this company before they bid it higher, and it resumes somewhat of a normal, very passive upward trajectory. So keep that in mind if you're looking to trade McDonald's. It's not the flashiest company, but sometimes those trading entries are very high quality entries and very predictable entries for the most part. So keep that in mind. That's everything I had for you guys for McDonald's. Now, stock number 3 we're going to be looking at is Fortinet. So Fortinet had their earnings last Wednesday, and we know that it was somewhat of an absolute disaster, at least in terms of the share price, because the earnings numbers were not bad at a first glance. Another example of a company that reports fairly decent numbers and then somehow goes down 26%. Let's take a look at what happened right here. So EPS was a beat by 8.5%, and the revenue was also a beat by 0.3%. So what exactly happened to Fortinet? Why were they down so much? Some of the easy numbers right here. EPS was up 12% year over year. Revenue was up 14% year over year. And total billings was up 15% year over year as well, with a shout out to their SecOps group, Security Operations, annual recurring revenue growth of 35%. Now, Fortinet makes money two ways. Yes, it's a cybersecurity company, but they also have a hardware division. So they have a products division, and they also have a service division where they have annual recurring revenue. A lot of these software companies, or rather a lot of these cybersecurity companies out there in the market, such as Palo Alto Networks, such as CrowdStrike, such as Cloudflare, they only offer digital solutions. They don't necessarily have any physical products. So this company has physical products, but it also has some of these same services that the other companies have as well. So at a first glance, it doesn't appear too bad, does it? Here is what people were caught up about. Fortinet falls on Q2 results. Investors were confused about the firewall refresh cycle. Cybersecurity stocks sell off as a result of these Fortinet earnings. Let's have a look at what the article had to say. The company backed off growth estimates for its core product, network firewall appliances. If you guys don't know what they are, take a look. These are the physical firewall devices that Fortinet sells for data centers, for large institutional clients, etc., etc. This, okay, back about a year ago, you might remember that I was covering Fortinet a lot on the channel. They were stuck in a range because they couldn't find the next growth catalyst for the business. They were growing revenue and EPS at low double digits, but the street wanted more. They wanted something to show that, the company wasn't just moving along, that they were looking for something big in terms of a refresh cycle for products, for services, capturing market share. And then Fortinet back here in the August quarter said, you know what? We're noticing that a lot of clients are about to have a very big refresh cycle for these devices right there. That's what led to the massive increase in price for Fortinet because it's a good growth driver for the company. However, this quarterly earnings, that was supposed to be like a 2-year refresh cycle, all right? However, the company, when they reported their earnings slides, they reported this slide right here, that 50% of the market global firewall units were already shipped. So sadly, I mean, it was supposed to be a 2-year refresh cycle, and we're like a year in. So I'm not too sure what Wall Street expected. It is the halfway mark of their prior guidance. But apparently Wall Street was expecting more. They were saying, oh, well, sadly, the refresh cycle of the firewalls is 50% done. And I guess they were expecting better numbers from the whole refresh cycle. So here we go. At Investor Day in 2024, Fortinet said many companies were in the process of replacing old network firewall appliances with new ones. However, investors were left confused by the company's formal statement that 40 to 50% of the firewall refresh cycle, estimated to be a $450 million opportunity, was now completed. This is driving confusion about why Fortinet is not seeing stronger product revenue growth and billings materialize. I mean, if you take a look at these earnings right here, I'll just show you in terms of the product revenue. Let's just zoom down here to the product revenue, if I can find it real quick. It's in the next slides. Give me a second here, guys. All right. So, product revenue growth, 13% year over year. That's not too bad, guys. I mean, prior, when we were covering this company last year, they were growing at about 10%. So I guess Wall Street was expecting more. It was a $450 million opportunity for them for the next 2 years. But then again, right? If you take a look at Fortinet's revenue, the revenue was already like $6 billion, $6.75 billion. So $400 million of that in terms of the refresh cycle is not a crazy amount, right? It's not as if they said they were going to 2x the revenue, but I guess estimates were just too high. Maybe the stock price ran a little bit too high, a little bit too fast. And as a matter of fact, when I covered this one on the channel in the last few earnings, I was saying that Fortinet for me was a buy down here for sure, but up here, the valuations was really stretched. It was showing that, to make those valuations make sense, the revenue and EPS growth numbers were just not there. It was indeed trading rich. Let's move further, shall we? The guidance underwhelms. Let's see what they said. For the current September quarter, Fortinet forecast revenue of $1.7 billion. The analyst estimates 1.71. So, I mean, underwhelming, maybe, but I guess they wanted to see a beat. And it goes in line with a lot of companies that we've been seeing this season, right? If everything is not perfect and companies are not raising guidance by a crazy amount, sadly, the company gets hit. Did they deserve a 25% hit after earnings? Probably not, but that has been a common theme throughout this earnings season. So I hope you guys are not too surprised about that. Fortinet expects billings of $1.8 billion versus the estimates of $1.793. So falling a bit short on billings guidance, or falling a bit short on revenue guidance, but slightly beating on billings. Just not good enough for Wall Street at those valuations, apparently. While the second half 2025 billings guide was raised by 1 point to 15% year-over-year growth, we believe the current refresh cycle at 50% attainment is posing uncertainty of core appliance growth once the cycle is complete in 4 to 6 quarters. So once again, focusing a lot on those firewalls, right? However, this company performed well, 14% revenue growth year over year, 13% product growth, but products are not even the largest component of the revenue. The largest component of the revenue is service revenue growth. So the question might be, well, how did they do in terms of services? They smashed it. 22% on unified SASE ARR growth and 35% on security operations. Very strong numbers, guys. There's literally not much to say here in terms of other things. Remaining performance obligations, money in the pipeline, 12% year over year. Now, in terms of the current, a lot of these are long term, but in terms of current, that was 15% year over year. So once again, the total billings was very good. So you can see the premise here is that the company just missed on, or rather, the expectations from Wall Street here were too high, but the company did not do anything wrong and also did not do anything they said they weren't going to do. They gave a 2-year refresh timeline. They're midway through that timeline. They've delivered 50% of their firewall units, which is everything is going according to plan. But I guess Wall Street thought that it would translate to more revenue or better guidance in the future. Two things that didn't happen. That being said, gross margins, very solid here. Product gross margins, 67.8%, and service gross margins, 87.8%. Matter of fact, guys, Fortinet is one of the cybersecurity companies out there that has the best net margins out of everybody. You'll notice a common theme with most cybersecurity companies is that although they have a SaaS business model, software as a service, their margins are just not high. There's a lot of stock-based compensation. There's a lot of research and development. You take a look at companies like CrowdStrike, right? They have very thin net margins. Take a look at a company like Palo Alto Networks. They have okay net profit margins. More recently in the past few quarters, mid-teens, 11, 12, 13, 14, 16%. Not the best. Take a look at a company like Zscaler. Same concept, right? This company as well, struggling to maintain positive net margins, although revenue growth is good. A company like Cloudflare, which has been very popular recently, them too, right? Low net margins, dare I say negative. Well, not dare I say, they are actually negative for the past couple of quarters, not able to turn a profit. Fortinet, contrary to them, is one company that's just been improving margins for the better part of the last 4 or 5 years. Their net margins now, high 20s to low 30% range. In this quarter as well, you saw 27% net margins. So is the sell-off on Fortinet overdone? But however, is it a buy? Well, let's have a look right here, guys. Revenue and EPS are growing decently, low teens. So it's definitely not the same revenue and EPS growth numbers as a company like CrowdStrike, or even a company like Palo Alto Network, which is mid-teens, or other companies like Cloudflare, which is very high revenue EPS growth numbers. But I wouldn't say that they're bad revenue and EPS growth numbers. They're just okay, right? And with these net margins, those are actually very good. Free cash flow for the company is also pretty good too. You can see the company doesn't have that much debt. They improve free cash flow every year, and they have a lot of money in terms of cash on the balance sheet. So a good financial position. In terms of the future growth prospects for the company, well, we're looking not too bad. EPS up and to the right every single one of the next 3 years, which is solid. Revenue, very smooth and up and to the right here for the next couple of years as well. So the company's doing very well. Good margins, good free cash flow, decent growth expectations, but unfortunately, underwhelming performance in relation to the expectations that Wall Street had. Is that the company's fault? Or did maybe people bid the stock price up too quickly, too soon? I think it's a question of being the latter. Back up here, the company was pretty overvalued, especially for these. It's okay to have high valuations if the company's growing revenue and EPS over 20%. But I mean, at 105, guys, if we were to redo these numbers with a 105 price, right? 105 divided by your EPS growth rate of 251, that's a 41-42 forward price to earnings ratio. At very low revenue and EPS growth multiples, that's maybe not good enough, right? And you divide that by 12, which is the to establish the PEG ratio, 3.5 for a PEG. That's very expensive. That's like CrowdStrike. That's like Palo Alto in terms of their PEG ratio and price to earnings. And it's just not growing as much as they are. Now, the entire cybersecurity industry is grossly overvalued, in my opinion, but the industry is growing well. The total addressable market is very large, and they will be moving higher because of the AI trade, of course, over the next 3-4 years. But the whole sector is overvalued. So when something doesn't meet Wall Street's expectations, well, it's very easy to unwind a lot of the froth in one or many of these names. At $75 right now, though, is it a company a good buy? It's now trading back under a 30 forward price to earnings. It's trading a 2.5 PEG ratio, which is still, in my opinion, a little bit high, but it is one of the low. It's one of the lower ones. Anything under 1 for a PEG, guys, is cheap. Between 1 and 2 is okay. Over 2, you start to ask yourself some questions as to, might this be a little bit rich? It is a little bit rich. Forward price to sales at 8.44. That's not too bad for a tech company. A lot of the cybersecurity companies, guys, trade at 15 price to sales, 20 price to sales. Cloudflare is the worst of them all, trading at a 33.5 price to sales. So Fortinet, honestly, it's the company with the highest margins, and it's the company with one of the cheapest valuations in relation to its industry. If you compare this to, I don't know, like Google or like companies in other industries, well, then of course, all of these cybersecurity companies are expensive. But in relation to its industry, it is actually one of the cheaper players, and it is coming into a historical area where the price has usually responded well. The 200 weekly EMA, you can take a look here over the course of the past 10 years. When the price comes down into here, it's not a bad buying opportunity. Prior resistance from prior all-time highs all throughout 2022, 2023, and 2024. That resistance is now current support for the stock. The stock is currently deeply oversold on the daily at a 16. So this one indeed would actually be a buy for me. The whole sector is consolidating now after these earnings. I think this one is not too bad, and we can trade it with a stop loss. A tight stop loss would be something under the earnings lows, which would be 70. A more fine-tuned, or rather a less fine-tuned but wider stop loss, would be all the way below this area right here, 65. But the gains could possibly be substantial, talking about a longer duration swing trade up to a couple levels. First stop would be 82, and then the next stop, of course, would be 94, and your final destination would be all the way back to the all-time highs. It's not going to happen tomorrow, but a longer duration swing trade, or maybe a longer-term investment, might not be the worst opportunity if this is a company that you like very much. I, for one, will be playing the wheel strategy down below in the support level, but I also would not be opposed to starting a call debit spread position, maybe with a couple months of time on it, just for the overall sector recovery as a whole. That's everything I had for you guys for Fortinet. Hopefully you guys enjoyed, and that wraps up all of our earnings calls. Hopefully you guys appreciated today's earnings recaps. Now let's dive into some charts, shall we? Okay, so starting off with the SPY here, the one thing that I want you guys to focus on is the size of this retracement. Now, we knew we had a very nice month of July, daily uptrend, and then we got surprised with the non-farm payrolls. We did not cut the daily lows, though, so we never actually lost the uptrend. However, it was a very big engulfing move. At this point, the bears have a good chance of doing the rollover. So first things first, you always need to measure the size of the bounce. And so far, the bounce is very, very strong, guys. You're talking about at almost 80% bounce, which does give the bulls a great opportunity of doing one of two things. Either the full engulfing move and just continuation of this very nice uptrend, or if they cannot get it done, they've created enough space here to create the higher low and resume the daily uptrend in 2 steps. The bulls are not looking too bad. And one thing is for sure, we never also lost the weekly uptrend. So when in doubt on the daily timeframes, always zoom out. The bulls never lost the weekly uptrend, still very strong right here, establishing the new weekly lows, and now looking to push a little bit further here. So not looking too bad at all. And in the event we unwind this, because that's always a possibility, if we unwind, go into a daily downtrend, you're just going to be looking for more weekly consolidation. And good things, we have a lot of support below us. 613 down to about 600 is the prior all-time high resistance range. It will be new support, and we have the supporting 12 and 26 weekly EMAs. The bulls remain in full control right now. On to the QQQs. QQQs up 0.93 on the Friday session, establishing a new all-time high. So obviously this is a 100% retracement from the lows, and it sets up the bulls nicely to do one of two things. Either straight continuation, or if we falter, there's a lot of space right now, anything above 552, looking for a daily higher low for a 2-step expansion profile on the QQQs. We never lost the weekly levels either, and now that we've established a new high, we can officially say our new higher lows are set. And the bulls never lost the weekly uptrend either, looking very strong, higher lows are set, and now possibly looking for a bit more continuation into the month of August. Now, many people might bring up the seasonality, and I was bringing this one up too, to where August through October are seasonally choppy periods for the market. But what is the sample size? This is 20 years worth of sample data. It doesn't mean that every single August is going to be red, every single September is going to be red, and every single October is going to be red. It just means that on average, this is the price action of the markets during that time. Could this year be a question of the markets can just rip higher throughout the fall season? Yes, but you kind of have to base some expectations on recent data, right? So we would not be surprised if anything happens, essentially what I'm saying. You hope for the best and you're positioned for the long term as well, but you would not be surprised if the price action is a little bit choppy. And one thing you have to keep in mind for next week, guys, is we have a volatility catalyst, namely the CPI. You can see here that the expectation is for 2.8%. That's the consensus. That is higher than 2.7. And as a matter of fact, you have Now, if that does come in higher right here, you do have now for the past 3 months in a row, June, July, and now for the month of, well, April, May, June, essentially you saw a bottoming out here, but now June, July, and the August reports, if they all come in higher and higher, well, what does that do? Well, it goes and feeds into the narrative that, tariffs are going to lead to inflation and that inflation is not dead, and the markets may have a little bit of a decline from there. So can it be choppy around the all-time highs? Yes, but the best thing you can do is build a shopping list of your favorite companies. If they come down into some support levels that you've been looking for, that is going to be the time for buying. So I do believe that any declines or any dips that we can see in the markets over the course of this fall period will indeed be for buying, and we should be able to have, if we have a choppy Q3, we should be able to have a very strong Q4, because then seasonality across the board, November and December, are known to be two of the best months of the year. So any short-term depreciation in prices right here could be one of your last buying opportunities to close out the year strong and move into 2026 as well. So keep that in mind. I'll be taking you guys along with every step of the way. We don't try to predict markets here, guys, right? What you just want to have is you want to have a game plan. You want to already have exposure to the long side, but maybe fewer short duration swing trades. Leap call options are fine. Shares for a long-term portfolio are fine, but just keep in mind, if we get some declines, that's going to be the time where you can load up your final batch of swing trades throughout the rest of the year and maybe some final leap contracts on companies you are looking to acquire to hold into 2026 as well. Moving into the XLF financials right now. Financials not doing too bad on the Friday session. Still no flushes of the low. So the short-term bears are trying desperately to bring this market down, but being challenged right now. You're looking for a break above 52.21. Give me a break above 52.21, new daily uptrend, and that is the end of weekly consolidation. It's been very wide price action here on financials. Some of my favorite names right now in financials, Visa looking very strong, coming down into its 200-day EMA, almost oversold conditions, and this is a pullback of roughly 10-12% from the all-time highs, which is very, very strong, right? This is a company that I really like buying. Berkshire Hathaway, same concept as well, right? Berkshire Hathaway, almost daily oversold conditions, tapped into it, almost coming into the bottom end of the support range down here, roughly let's call it 450s. I love to see this one 450s because Berkshire is down 15% from the all-time highs. It's been going contrary to the S&P for a better part of the last 4 months. Just look at historical standards. Every time Berkshire comes between the 12 and the 26 EMAs, is it a good buying opportunity? Does the market tend to pick it up? This is COVID. Even during the big bear market of 2022, the bulls did start bidding in this area. So you have a lot of confluence of factors here. You have prior support, you have oversold conditions on the short-term timeframes, and you're in a historical area where the bulls have supported the price. So a lot of people constantly ask me every single day, what's happening with Berkshire? Is it a buy yet? Is it a buy yet? Why isn't it going up? Guys, if you're playing a company like Berkshire, it's not Palantir, right? It doesn't have massive upswing in a single day. This is an accumulation zone for the bulls. The buys will eventually be rewarded, in my humble opinion. Financials not looking too bad overall as a sector, just in a little bit of a monthly consolidation phase right now, but the bulls are indeed in full control. Worst case scenario for financials, if we come down 49.52, back test the 12 EMA, and might just be due for a leg higher. So financials is a bit of a mixed bag right now, but I am still fairly bullish on several components of this sector. On to healthcare, another sector that's been struggling recently. They flushed, guys. They flushed the infamous 130 level as of last week. Eli Lilly earnings was the last piece of the puzzle. You might know that I have leap call options on XLV, some of which was started the second day of June. I bought my first leap contracts there, and I was waiting for earnings season to kind of show me, where do these healthcare companies stand? Are they going to have some of the last possible drops? Can we finally get the final flush in these companies before guiding higher? As a matter of fact, if you want to take a look here, FactSet, right? Let me just go down here. What I want you guys to see, okay, is some of the news from healthcare. Which sectors were reporting the best numbers? You can see here that the amount of companies reporting above or in line or below estimates, okay? Look at information technology was the best one. Healthcare was pretty good, guys, pretty good. Above expectations, 86%. The sector is strong, despite the fact that price action doesn't show that. Revenues above or in line. Healthcare, top percentile here, second best sector behind technology. 95% of companies reporting revenues above the expectations. Very, very strong. Earnings surprises as well. Healthcare is there too, 9%, one of the stronger sectors. So when the price action is not following the fundamentals, well, you guys know there's a discrepancy there. And in the markets, every single time, it might take a while. Eventually, though, the market does correct in the direction of the fundamentals, and the fundamentals were quite good. Now that we are through earnings season, I just bought my final leap call contract on XLV. I'm still a big fan of playing this sector, but as I said many times, it's going to be slow. It's a monthly downtrend. These things take some time to reverse. You have a large accumulation zone. The bulls have been trying their best to play some defense since the month of April into several areas of support right here. Well, it's just one big area, but you guys get what I mean, right? Several components of price action from 2021 to 2023. This is indeed still a buying opportunity below the 50 monthly EMA. Rarely does that ever happen. And when it does happen, it's always been synonymous with a buying opportunity. It may not happen right away. It may not happen as fast as you want it to, but I've been clearly saying how you play this trade. Accumulate, just like the institutions. If you have call options, we shouldn't be going for weekly calls, monthly calls. No. Leap call options. Put some time on this trade. Allow the bulls to slowly round the bend. That is how we're going to play healthcare. Moving on to SMH right now. SMH, your best performing sector of the week and of the past quarter, of course. Now, that being said, the SMH is currently still, in and around the all-time highs right now. Nice new daily uptrend set by the bulls and recapturing our short-term momentum moving average, which is the 12 EMA. Consolidation is somewhat sideways at the top end of the all-time high range right now. Your weekly lows are set at about 280. So watch if ever we roll this over. You're just looking for another higher low, guys. The first area of confluence is probably your prior all-time highs. 12 EMA on the weeklies right there. You see it best on the SOXX. On the SOXX, this one just has less exposure in NVIDIA, Broadcom, and the top names in the sector. It's a more balanced weighting overall for the ETF. You can clearly see what's going on here, right? Weekly higher lows, backtesting a lot of your prior price action, guys. It's a huge level. All dips in semiconductors are for buying. Matter of fact, I was pointing out a few opportunities, some of which have been starting to play out recently. Micron, this was an insane opportunity, guys. Just looking for a weekly higher low. Backtesting all of these guys, prior resistance, newfound support, bidding in this area. Now we're finally getting some rewards. ASML, also a company that's been challenged, but where is it? It's in a very nice area of prior support. 200 weekly EMA. This one is indeed a bid. It's starting to come alive, but it's a little bit slow. So most of your action doesn't have to be focused on NVIDIA, AMD, and TSM, although I know you guys love playing those. You can find opportunities if you look outside of those, if you're looking for other names with strong business models that have been consolidating during this 3-4 week period. So please keep that in mind. And lastly, the Russell, moving on to the Russell. So the Russell all over the place this week, man, all over the place because the yields have been all over the place, right? Daily downtrend, nice engulfing move. But overall though, guys, what are we doing on the Russell here? We're just trapped between two levels, trapped between overhead resistance and below support. Support is 216 on a 208, overhead resistance 231 to 226. I'm still not convinced that the Russell has the green light to fully expand. In my opinion, that's only going to come after the month of September when the Fed gives more clarity on rate cuts. This sector moves a lot more with interest rates than it does with the rest of the market. A lot of these companies, guys, are unprofitable businesses. They require a lot of debt to operate their business models, and they have to refinance that debt at lower rates, which takes a lot of pressure off of their balance sheets. That is why the Russell, although it's caught up with the rest of the market, it's not running like the Qs or semiconductors and stuff like that, right? Still a very challenging trade. If your opinion is that small caps will have some very good years ahead of it, well, you need to play the long game on small caps rather than trying to time the breakout and run. It should be a longer duration trade. I'm not opposed to playing it, but if you do play it, you got to have a longer term time horizon than just a few weeks, or you may end up slightly disappointed. So please keep that in mind. Taking a look at the VIX right now, the VIX unwinding the entire last Friday session, guys. From the non-farm payrolls jobs report, we are now right back down at 15. So it was a tremendous opportunity to be selling some puts in the market. We did a good job in the Discord as well of identifying a lot of opportunities, guys, in the markets this week for selling puts. I mean, even though the VIX is no longer what it was, you can still find some very strong companies in the past week or so that have pulled back 8-10+% with their earnings. So focus on those. Although the overall volatility of the markets is not as high as it once was, it's still not bad. A lot of companies have come down a lot. The volatility has come down a lot. As a result, right? Some leap call options on some of these, now that the volatility is lower, is not bad. Think about the long term because the short term might be a bit choppy. Any trades that are fired off right now, you need to have an accumulation, right? An accumulation mindset and a longer duration mindset as well, because the markets are going to be a bit awkward and choppy as we move through CPI next week and as we anticipate what is the Fed going to do in the month of September. So keep that in mind if you're looking for volatility catalysts and how to play these things, right? In terms of the yields, well, yields came down a lot after the Monday session, but somehow started upticking throughout the week. I'm still not convinced, guys. I think yields will do absolutely nothing until the September Fed meeting. The 10-year yield refusing to break much below 4.2, which is really what you're looking for the downtrend on the longer-term timeframes to start. 20-year, same thing. I need to start seeing them break down below 4.7. They have not done it since the month of April. It's just been between here and the 5% range. I still think it will be choppy, and as a result, I'm not sure that bonds are going to get much love or much lift before the Fed provides some guidance on the interest rate cutting cycle. So please keep that in mind. Bonds, still a very tough trade, but just like the institutions, guys, you have to accumulate down here and not think that, well, in the next month is going to happen. In the next 2 months is going to happen. No, this trade needs to be measured in terms of months and months and months. 3, 6, 9, 12 months type of thing, right? So keep that in mind. Moving into gold now. Gold not too bad in terms of the price action, right? We can clearly see that Friday was a decent close and closing above resistance. 3,400 roughly, 33.96 if you want to be really precise. And the bottom end here, 33.65. The bulls looking for a bit of expansion here, still not bothering to set any higher lows. Any pullbacks possibly into 33.50. I might just be looking to possibly bid some gold right here into the EMAs. I'm going to put a bit of a bid action in there, maybe going for the expansion trade. What are we looking for here, guys? This is a tightening up. This is a bull flag. Clear bull flag. The bulls are looking to go for it. So the next little pullback, I'll try to play the pullback. And if you want to know why I'm targeting 33.50, 33.30, almost a 12 EMA on the weekly curling up there. We've been riding it now for a better part of the last, 6, 8 months? So if you pull back a little bit here, going for a weekly uptrend, I'll be looking to bid into that weakness. Stop goes below the low here, 32.50, and I'll be targeting expansion, 3,500. Okay, so it's a longer duration trade as well, not so much a short-term day trade for gold. And lastly, Bitcoin. Bitcoin closing the day on the Friday session, a little bit in the red, but you can see this weekend has not been too bad for Bitcoin. Daily uptrend is very nice right now. They're trying to reclaim this 117 area that we lost. It was a daily downtrend. Now, recovery by the bulls. If it's confusing, when in doubt, zoom out. What are we looking for here? We have always just been looking for a weekly higher low for further trend continuation. Now, I've been playing some short puts into this area using names such as IBIT or names like BITX, just selling puts into the lows there because I want to buy some Bitcoin for a swing trade if the price pulls back there. Still unclear if the bulls will have it in them to fully engulf this move and push to higher highs, and if that's the extent of weekly consolidation. If it is, no problem at all, right? But if it is not, if we drop down here, this is definitely a nice buying opportunity for Bitcoin bulls. Right now, it's a bit of a half position, right? If we're trying to position, if you guys are trying to be aggressive bulls and saying these are the lows and going higher, perfect. Then there's a trade for that. You would set a stop loss down below here, below 112, and you would be going for the expansion of the psychological target, 125, 130. So keep those in mind if you're looking to swing trade Bitcoin. And in terms of the other coins, guys, Ethereum really getting some nice lift. We got Tom Lee's fund right here, essentially. BNMR having a tremendous rally. Now, you guys should trade this one based on the MNAV, but basically kind of like MSTR, right? This one looking very strong in terms of the MACD crossover. Wouldn't be surprised if we can get somewhat of a sustained push. It'll be on expansion of the MNAV, not so much on confirmation that the fund has acquired new ETH, at least in the short term, right? But Ethereum looking very good. Now, Ethereum, beautiful daily breakout, leading Bitcoin in that respect. And now we've broken out of a key level, a very key level here, guys. This is prior highs. It's been prior highs for a better part of the last year and a half. If you get a pullback, there's a weekly uptrend. If you get a pullback, they'll only maybe offer you this trade once, looking for a daily higher low into support now. Let's call it 4,000 down to 3,700. This is the new liftoff zone. If you pull back into this area, it needs to be a weekly expansion trade profile. Come down into there, stop loss goes down below here, 3,300, and then you are targeting psychological expansion numbers, 5,000 plus, etc., right? You can go for the wide swing trade on Ethereum. That is how I would look to play it myself, looking for the back test, so keep that in mind. And that concludes pretty much everything in terms of our overall market rundown. Now let's dive into some big tech names, shall we? So starting off with Apple. Apple. What an absolute phenomenal push by this company from the lows, talking about almost 14% in just 3 trading days. This is definitely not usual Apple price action, but they are challenging the top of resistance right now. 231 down to 217 is the top end of that range. In the event the bulls do pull back, maybe last chance to dance for some entries for some Apple positions here, guys. They will backtest the same area that's been proving challenging for them, essentially, since the tariff sell-off. So, bit of a higher low in the event that the bulls cannot complete this resistance breakout in one clean shot with daily overbought conditions, as you can see here. Just looking for a higher low. Anything above 201, looking for a higher low to try and manifest the daily uptrend. In the event that they break higher, well, you're just going to be looking for the good old breakout retest. The weekly uptrend is not looking bad. Beautiful engulfing move by the bulls right here. If they break through, you'll be looking for a back test for a possible entry into Apple. Taking it here, going for the breakout, I'll let you guys be the deciding factor if you want to take that trade. Not my style of trade. I'm more of a back test of support type of guy myself. If you do see a bit of a back test right here, it may be a decent little entry for Apple, right? Talking about under 220. Even selling some puts on a bit of decline right here, selling some puts below 220, talking about the mid-teens, 214, 215, etc. Not a bad proposition for Apple. Apple looking very good for the breakout, and I would not be surprised if there is a bit more juice left in the tank. Maybe not immediately, but for maybe a 2-step or multiple-step recovery process back to the highs, Apple is trying its best to play some catch-up here. You remember, I've been talking about this one, guys, for I don't know how many weeks in a row right now, but year-to-date, Apple now 8.5%. After earnings, the company was down 19% year to date. Clear to see what the company's doing right now. They're catching back up to some of their sector peers. Fantastic performance by Apple over the most recent week. Moving on to AMD right now. AMD down about up about 0.21% on the Friday. Still no recapture the daily uptrend, but the bulls are not looking too bad. Almost a 100% engulfing move. Not looking terrible, right? But they still need to reset the daily uptrend. There's 2 ways that they can do that. Either you can smash through this resistance zone right there, 185 down about 171, breakout, retest, and run. That would be a swing trade opportunity. Or on the flip side, if they cannot get it done and we unravel down here, well, what are we looking for? Higher time frame. Also, the nice breakout of the 150 area, right? Beautiful weekly uptrend. Looking for a higher low for possible further trend continuation. So if we see some further pullbacks on AMD, I'll be selling some puts down here. And if we come all the way down there, it might just be a nice candidate for some leap call options, as AMD's revenue growth for the next few years and EPS growth is going to be very, very strong. The company still is going to have some of the best quarters of the company's history ahead of it, right? Look at this EPS growth rate for the next few years. Look at this revenue growth rate for the next few years as well. They are currently having their NVIDIA moment. There's really no other way to say it. So for me, 1 of 2 situations. Give me a back test down here, I'll play. Into resistance, a bit challenging, but you give me the breakout and the retest, then we can also talk, because then it'll prove to you the bulls have claimed the level. Buying things into resistance, guys, is just not my style. You probably understand that by now. Sometimes it works, sometimes it doesn't. I would rather have confirmation, right? So give me a confirmation of a back test back here, or give me a confirmation that you want to claim the level, and then I'll play the retest of that level, which would then be, this is previous resistance. It would now be acting as support. So it's just higher probability trades. What I want you guys to focus on is trades where you have confirmations that certain levels are being respected, rather than just buying something and crossing your fingers that it's going to smash through, right? It can work sometimes, but a lot of times it just doesn't, right? Moving on to Amazon right now. Amazon also trying to do its own version of cracking back through resistance. Resistance stays put, 227 down to 219. You can see that the bulls are doing a good job here of recapturing a lot of this move. The bounce size as of right now is about 50%. Why do we look at that? Well, because if we start rolling over again, well, the bears have a 50% chance here on the fibs of rolling over and setting a new low. The bulls, on the flip side, have a coin toss, 50% odds of resetting a new daily uptrend. It's been a decent sized bounce, but we are contending with a bit of resistance. One thing is for sure, if we fully engulf, you're going to get the same type of trade style again, this time no earnings though. So nice, give me back the resistance range, back test it, then I can set a clear stop loss below there. And then I can go for a bit of an expansion towards the all-time highs. that is one trading style. In the event that you just unwind this entire position right here and make your way back to the lows, I'll be gladly selling some puts in the lower $200 range, as close as humanly possible to the lower 200s, right? Under 210 is where I kind of want to position for some short puts. Overall, the bulls aren't looking too bad. It's true that the earnings move took a big chunk out of this weekly leg higher, but the weekly higher lows do still stand at about 208. Amazon's still one of my favorite companies in the market for the next 2 years. On to Google right now. Google, man, what a very nice leg of expansion by Google, the company that has been left for dead. ChatGPT, Perplexity, Anthropic, everybody was supposedly eating their search business for lunch. Well, we didn't really see that in the earnings, did we? Search posting very, very strong numbers, no sign of slowing down, and arguably no true losses, no massive losses in market share overall. Now, that being said, the price action is very clean right now. Bit of a struggle, daily downtrend from the highs into the non-farm payroll sell-off, downtrend, and then look at the bulls. Engulfing move right now, coming into resistance 207 down to 202. In the event that you get the back test of support stays put 194 to 187, give me a back test and I might play. I'll play with some short puts down into this range as well. On the weekly, everything is looking very strong right now. Beautiful weekly uptrend. Any move lower, so if you lose this daily here and go into a downtrend, just understand, what are the bulls looking for? They're just looking for a weekly higher low, guys. Anything above 163, looking for a new higher low for possible further trend continuation. It's a bit tough to chase Google up here for a short-term swing trade. However, long-term shares, not a bad proposition. The valuation of Google, even at 200, is very low, right? They're still not back to prior all-time highs. Google as well, playing a bit of catch-up with its sector peers right now. Google on a year-to-date basis only up 6%, which is trailing the SPY and is trailing the QQQs. Moving on to Meta right now. Meta up 0.98% on the Friday session. Very strong, holding highs right here is Meta. Not giving back too much of their phenomenal earnings release. There is a bit of a swing trade here, guys, because earnings were so good. You know, there's a little bit of a swing trade to be had right here. I must admit myself. The stop loss would go below 744. The entry is here. Stop loss goes below there, and then you're targeting expansion, 800. Not a bad trade. It's a very tight trade, but one that you can make nevertheless. People who have a longer term time horizon might be looking for a bit of a gap fill. It's not going to happen though if the S&P and the QQQs don't start falling down. So you got a backtest area of the prior area prior to earnings, and you would just be looking for a weekly higher low. The bulls are looking very strong. Some of the more patient bulls that are looking to go with a bit more size, they would be looking for those weekly higher lows. As I said, you might be targeting these previous levels right here, 730, 720 for the back test for the weekly higher low before possible further trend continuation. Come down there. A person who has a very wide stop loss going for the longer dated expansion, their stop loss would go below here, below 680. Entry would be there, and then you're targeting psychological levels of expansion, 800, 900, etc. Right? So Meta not looking too bad. The valuation of Meta also not too bad for adding some long-term shares at 760, the same numbers we had from after earnings. The valuation is not so rich. I mean, I wouldn't start a full-size position here, but if I had Meta as part of a portfolio, and I'm the type of person that every single 2 weeks with my paychecks, I DCA into the markets, Meta would also still be a DCA candidate. I don't believe the valuation is too rich, and I believe the future is still very strong for Meta. Moving on to Microsoft right now. So Microsoft down about 0.23%. This is a company that has lost the daily uptrend. They have not lost the short-term momentum guide, though. But this is stage one in a possible extended consolidation period. But the bulls still need to give a bit more up, right? If Microsoft comes below this 12, it'll kind of be like Netflix. You remember what happened with Netflix? Very strong, holding the 12, and eventually we lost the 12 and the uptrend, and that started about 5 weeks of consolidation. Still curious to see if that's going to happen on Microsoft, but if it does happen, just understand your bulls are working with an ungodly amount of space right here. Anything above 355, looking for a weekly higher low. The first off probably is going to be the weekly 12 EMA. The bulls haven't really bothered setting much support areas in the short term. It's just been one very strong sustained move to the upside. I'll be looking to bid any extended consolidations on Microsoft, but no swing trades at the all-time highs for me right now. Company, in my opinion, is fully valued. Speaking about Netflix, 2.65% to the upside. So something has now shifted, guys. Daily downtrend, you can clearly see it, right? Loss of the 12, trading below the 12. Now the bulls engulfing the most recent leg of selling, challenging the resistance range, which ends at about 1225. We're almost over it, guys. We've recaptured the EMAs. Look at the daily MACD. Momentum is shifting. You may have just found the end of weekly consolidation. Now that we have several things that have changed, the engulfing move by the bulls, the shifting of the MACD, the recapture of the EMAs, and almost the resistance, if you are trying to establish that this is your weekly high or low, now is where you would do the swing trade. A more aggressive trader would price it in now and would enter here. A more conservative trader would maybe wait for a back test of the lower bound of support right here, 1175 type of thing, where these candles stopped. You might be looking for a back test of those guys and the 12 EMA for a possible entry with a tighter stop loss. You're claiming that this is the weekly low, right? You're claiming that this is the weekly low, and now it might just be the bull's turn for a bit of expansion. Your entry would be here or around here on a back test. And where are we targeting? Well, we're targeting first expansion, 1275, final expansion, all-time highs, 1340. Not that bad in terms of a risk to reward trade, guys. Now that several key things are shifting, we can make an attempt, but we do need to trade with a stop loss, because if ever we get invalidated, we know that that is not the utmost weekly lows, and you might just be looking for a weekly downtrend and further monthly consolidation, which will take more than one day to resolve itself. So we can make an attempt for a swing trade here. In terms of long-term shares, right? Not terrible, but still somewhat rich in terms of valuation. If you have a 3 to 5 year time horizon, Netflix has a good chance of being a $1 trillion company. At least that's management's guidance by 2030. It's currently trading about $500 billion right now. So you're looking at maybe a double for some point over the next 5 years. Not that bad of a compound annual growth rate, about 20% per year per management's guidance. Moving on to Netflix right now. Netflix 1.07%, NVIDIA 1.07% to the upside. Looking very strong here on NVIDIA, right? We know the bulls never really lost the uptrend. Higher lows are still set 171. Any move lower looking for a new higher low for possible further trend continuation. We've been oscillating overbought conditions, but nothing too crazy right now. The one thing that you'll understand, guys, if you're looking for consolidation, two things need to happen, just like we saw on Netflix, right? Especially if it's a 3-month uptrend right now, no loss of the 12, you need to get a daily downtrend and a loss of the 12 EMA. Then and only then can you say, yeah, NVIDIA is looking for some extended consolidation. Where can we come down into? First stop would be the 12, 158, and then below the larger area of support is roughly the $150 range. So keep that in mind for NVIDIA. Still looking very strong. 182 right now on the price is a bit of a stretch. If I'm an NVIDIA shareholder, I'm not selling, but if I'm somebody new looking to buy NVIDIA up here, well, it would have to be a DCA approach, because definitely I'm not shoving everything at one price right there. If I do have some consolidation, if I buy here, nibble a little bit there, I'll be looking to buy with some form of consolidation, which might be coming at some point throughout the fall season. Just be patient for it, guys. No FOMO. There's so many stocks to trade in the market. I know you guys love NVIDIA, but right now it's just not the most optimal entry on a risk to reward perspective, especially if you're trading, right? On to Tesla right now. Tesla 2.29% to the upside. This little swing trade here that we established down here is working out very well right now. It's been a tightening range on Tesla, and we were commenting that at the bottom end of the range into support 300 down to 250, we have a nice bull flag right here, a very nice bull flag, tightening up of a range of accumulation. The entry was there, the stop was below 287. You're almost into take profit territory, okay? Almost there. Now, the actual take profit territory is resistance, talking about 342 up to about 364. What the bulls are looking to do here, they're looking to reclaim the weekly uptrend. Where have we seen this pattern before? Apple, tightening range like this. Eventually the bulls, right? Tightening range, bull flag like this. Yeah. Eventually the bulls recapture, give a back test, and then run. Tesla, maybe, I'm not saying for sure, but maybe the same thing, right? Trying to break above the bull flag right here. Tap into resistance, maybe a back test, and maybe the run. So picture that scenario in your minds. If you see it, there is an opportunity to be had there on Tesla, and that is just how I see the chart. Moving on to Palantir right now. Look at this weekly candle on Palantir. Absolutely massive. 20% week on Palantir. Started with earnings and just continued every single day of the week thereafter. Looking very strong, but we are extended now on the RSI. 82. You would not be surprised if a pullback is coming. In the event the pullback does happen, looking for a higher low, anything above 150, looking for a new higher low for possible further trend continuation. I know, crazy it may sound, as it may sound, that's what it's looking for. Upside target, obviously 200 psychological, and then, well, whatever number your heart desires, essentially, because apparently this stock cannot be stopped. I'm very happy to say that as a Palantir shareholder, but I'm pretty sure everybody understands the stock is wildly overvalued right now, right? I don't care what your 5-year expectations for Palantir is. it'll be overvalued that entire time. So keep that in mind on Palantir. No swing trades for me right now. If I'm looking for long-term positions, it's very tough for me to justify an entry up here unless I have like a 5-10 year time horizon to justify these multiples. I'd be the type of person that if we get a quick and rapid pullback into some EMAs, maybe we can find some entry zones, but as of right now, no clear swing trade from me. Moving on to SOFI right now. SOFI up about 0.09%, still struggling with the resistance highs, right? 24.37, let's call it 24.50, all the way up to roughly all the way down to 22.50. Not looking too bad, but those are the resistance highs from prior in 2022 and 2021, so keep that in mind. The bulls are looking good though. They're maintaining the highs of this move. Look at this massive move, right? Many chances they had to forfeit this range and consolidate a bit more. It's nice to see that they're holding close to the resistance range. It kind of hints towards the fact that maybe they want a second attempt at that range overall. The daily is not looking too bad, although it's also somewhat of a tightening range here at the highs. SOFI for me is a bit of a multi-tiered bid right now. If I'm looking to bid SOFI, I'm looking to maybe sell some put options down below here in the 19 range. And if it falls a bit more as part of some extended weekly consolidation, excuse me, well then maybe I just lean into the trade as it starts moving down, right? But if we're looking for long-term shares, not too bad. At 21 bucks, the valuation at a 1.35 peg and a 7.3 price to sales is not so bad in the context of it being a fast-growing, largely tech company, right? Moving on to Uber right now. Uber down 3.36%. There will be a bit of an opportunity here on Uber if we start unwinding overall. The clearest time frame for me has to be the weekly. The daily is very choppy because they had earnings and there's a lot of price action happening here, right? The clearest time frame for me is still the weekly. Nice weekly uptrend, looking for a weekly higher low. Anything right now above 81, 82, looking for a bit of a weekly higher low. And if we pull back a little bit more, I'll be selling some put options down here. It's tough to position at this level in terms of short-term swing trades because you do have resistance right above, which once again, we got rejected at again. But if we're looking to sell some put options down here, clear and easy trade in my humble opinion. And if we're looking to position for long-term shares, we did the valuation after earnings, guys. The valuation is actually quite good. So I am a big fan of even adding some Uber shares up here. It's not a terrible valuation overall. So I've built most of my position down there, but let's say I didn't have one. Buying some here and then leaning into it, if it does progress to the downside, the valuation does support some good expansion for the next few years. And lastly, TSM. TSM has just been kind of holding highs, but very strong price action in the last few days of the week. The bulls are still just holding, right? We had the daily downtrend, engulfing move, and now the bulls are looking to reset, reclaiming the 12 EMA. I know the price action is very, very choppy right here. Short-term swing trades would be as follows, guys. If we're trying to claim that this area is the weekly lows, your stop loss for any short-term swing trades would be down below here, below 229, and you'd be looking for expansion psychological numbers, 250, 260 to the upside. You'd just be looking for a weekly uptrend continuation. Not a bad location for some swing trades, but keep in mind, it is currently the all-time highs. And, semiconductors, for the most part, have been a little bit choppy recently, right? Not talking about the big names, but a lot of the sector has been very choppy. In the event it doesn't play out and you unwind this, well, you're just looking for a very healthy new weekly higher low. A couple of key targets here would be 221 on the pullback, 12 EMA, and over and above that would be 211 down to 210. That's a long ways away. You'd have to have a pretty significant pullback in the market for TSM to fall 12%. But if it does start happening, just understand it is a heck of a buying opportunity, especially leading into Q4. And their earnings that they just had showed that the company is positioned very well. It's cheap. It is actually very cheap up here. It's only trading at a mid-25 forward price to earnings, 1.5 peg, very decent, and growing revenue and EPS at fast clips. So TSM for me, for a long-term portfolio, is still a buy, even around the all-time highs. So keep all of that in mind if you're looking to position for some swing trades and or long-term position buys. That is everything for our overall index recap. Hopefully you guys enjoyed that section. Now let's move into our biggest gainers and losers of the week, or of the day rather, on Friday. Okay, so we're gonna go through this list a little bit quickly and I'll highlight a few opportunities that we might be able to have. Trade Desk. So we covered their earnings last week after they reported earnings, of course. Now, the valuation here is still a little bit high. So if I had to play this one, I'll play with very clear areas of support. Not so much of a long swing trade for me because the bears don't appear that they're consolidating much, right? We need to give it a bit more time, but there's a very clear level to be basing maybe some short put contracts on if you like the company. Down here in the $40 range, this is where the market stopped the price in the tariff sell-off. It's where the market stopped the price in 2022 and 2023, and would be an area where I might be interested in selling some short puts, especially due to the fact that we are starting to get into some daily oversold conditions. So we might have a bit of a stop there, but definitely not a company that I'm looking to position long right away. I'd rather wait for the market to give me a local bottom to establish some form of a stop loss area. Moving on to another name, SMR. SMR is a name that I'm starting to play, but I'm playing it with some big distance, right? The clearest time frame for me is the monthly. We got a nice candle here of some consolidation after their earnings. In terms of the daily, it's still a daily downturn right now. The bears are in full control. We have one temporary level right here, 36 to about 34. It does provide some temporary support relief, but the weekly is coming in here with a lot of momentum, right? This is a very big retracement here on the fibs, talking about a 61, 78%. So it shows that the bulls have a lot of momentum behind them right now. I'm looking to play this one with some good distance, not looking for any long entries, but I will play short puts in the lower 30 area. And we can find them. Matter of fact, I found them on Friday, guys, when this stock was down 10%. I wrote some short puts for the 32 strike. Arguably the start of that large monthly area that I was talking to you guys about. I would not mind being assigned down there. It would be a very nice monthly retracement into a 12 EMA and into a larger area of support. Consolidation for this company. Keep in mind, the sector is hot, but this company still has no revenues, right? I'm moving into Affirm right now. Affirm, very nice weekly uptrending pattern right now. We are coming down. I wouldn't necessarily mind selling short puts under 60, but myself personally, guys, I'm a mid-50s, guys. So in terms of if we get further pullback on Affirm right now into this support range, Affirm has some very good volatility. If you pull back hard into the high 60s, you may be able to find under a $60 strike for some short puts. It would be below the support area. That's how I'm looking to play Affirm myself. If you pull back a little bit more into these guys right there, you could establish some form of a long swing trade, establishing a stop loss below 62.50 and just going for some possible weekly momentum continuation into prior highs, talking about the high 70s and 80s. So two different trading styles. I'll be going for the one with short puts. Moving on to Texas Roadhouse. After earnings declining, coming down into support down here, guys. 172 down about 163. Now, I'm not too sure if the bulls are going to be able to stop this heavy momentum, but one thing's for sure, if we hit the bottom end of this range and continue into some daily oversold conditions, maybe selling some put options down here, mid 150s to the lower bound of support where the markets did stop the price back here in the tariff situation. These are also areas from April of 2024 and the bottoms of September 2024. If we do get big momentum to the downside in oversold conditions, the trade that I'm going to be looking for is to sell puts down here because the bears are in full control. If I want to take a long, I'm not just going to take a long from support here and cross my fingers. I'll need to wait for a daily uptrend. Give me the uptrend. I'll position here. I'll establish a stop loss below those established lows, and then I'll be going for the recovery of the weekly time frame. Overall, Texas Roadhouse, though, probably more on the short put side for me. Talking about a few more companies, like we can bring up Oklo right here. Oklo for me, same concept as SMR. I'd like to see a pullback into a more well-established area of support, talking about the mid-50s. I'm not saying it's going to go there. I'm just saying if it does go there, that's where I would be more interested to sell puts on this name and possibly be assigned and run the wheel on it. No swing trades for me at these heightened levels, even though the bulls are in control right now, just not for me. I mean, I guess you can make an argument. You can put a stop below here and just go for the daily trend expansion. But, you know, when you're so extended on the monthly time frame, you're so extended on the weekly time frame, it raises the question, right? How much do you actually still have left in the tank? Rocket Mortgage is another one I want to highlight for you guys. Clear weekly uptrend right now. Pull back into support, which is 1550 to 1450. Decent area, guys, to be building further longs on this trade or even selling some put options down there. Rocket Mortgage probably will be favored over the course of the next year as we do get into the rate cutting cycle. Another one that I'll be targeting for short puts is SentinelOne. The entire cybersecurity industry has been selling off recently, and we have a very clear area here of long-standing support. 2022, 2023, the company's expanding revenues and EPS. Well, it's still not profitable. It's one of your smaller cybersecurity players. Overall, I do not mind selling puts in this lower location, especially if we have somewhat of a smaller account. On to Chipotle, another stock that's just been selling off recently. Daily oversold conditions right now. RSI is a 22. Big sell-off. The weekly bulls, the weekly bears have a lot of power behind them right now. We're coming into the next zone of support, which is largely 41 down about 36. I wouldn't mind trying my hand at selling some put options. You're almost weekly oversold. You are daily oversold. So it stands to argue that we might get a bounce from this area. The resulting bounce may just be a continuation of the rollover. But suffice to say, I do believe the bounce is somewhat coming sooner than later on Chipotle. So it might just be a nice entry if you can get some short puts here well below the price. And those are some of the companies that I wanted to talk about. Palo Alto Networks, by the way, still a trade. This might be on the top 5 options list. Palo Alto Networks, daily oversold conditions into a support range right here, which is 170 down to 160. Not too bad of an opportunity in my humble opinion. If we come down a bit lower, you can sell some puts even lower. Try to target the lower bound of the maybe the 150 range. You can get some good distance if you have some volatile days, but maybe it's a 2-step process for those of you that have a big account. Maybe you do some here and some down here. Strong company just going into a bit of extended consolidation on the higher time frames. I'll remind you, the piece of news that hurt this company is their acquisition of CyberArk, right? So this company right here, that's why they're coming down a lot after the news of that acquisition. Palo Alto Networks dropping a ton, but still a very solid company, daily oversold conditions. So maybe not the best for a swing trade long, as the bears are still in short-term control. For a swing trade long, I need to see a reversal of the timeframes. Give me a daily uptrend. You guys know me. I enter on the daily uptrend, establish a stop loss below the weekly lows, and then I go for the target expansions of the levels overall. But still no swing trade longs for me. But this one, selling puts, definitely not opposed to overall. In terms of the companies that did the best on Friday, we'll review a few of those. SoundHound, not really interested. We're into resistance right now. You guys know the drill. I need to see the breakout and retest. Maybe I'll play the retest, but no entry for me right now. CoreWeave, interesting name. They have earnings on the Tuesday session, right? Look at this. MACD. How many months of downside has it been? Almost 2 months of straight down. New daily uptrend. So, although they have earnings, okay, it's going to be a very volatile week. If they did not have earnings, this is a clear long. Clear long. Daily uptrend, first of its kind in the last 2 months. This is what you're waiting for if you're a bull looking to enter with some larger buyers, right? Recapturing the short-term support ranges, and the stop loss can go down below here, below 100. I know it's wide, but the whole trade is wide. You're looking for the weekly higher low, and then possibly continuation and expansion back to some levels. So I know the stop loss range is wide. My apologies. I wish they would have been able to, set a tighter range down here with a daily uptrend. That's not the case. So the stop loss is very wide. Personally, myself, my favorite way of playing this one is still short puts under the market, but I probably will not be positioning before earnings, even though the premiums are super attractive, guys. You can even get an $80 strike in earnings. Maybe I play the short puts all the way down there. Maybe not. I'll have a look, but they have earnings. So even a swing trade like this, you're looking at a lottery style trade, right? Maybe some call debit spreads. Keep it very small, because if they unwind you after earnings, you don't want to lose too much money. One thing's for sure, though, if you get a bit of a back test down here after earnings, then the positioning is going to be clear as well. I'll be looking to sell some put options below the market too. Micron, we talked about it earlier in the video. Great area for Micron, guys. We finally have completed the weekly higher lows, and the bulls are looking for a bit more. So sadly, you're a bit late to the trade right now, right? That being said, the area to buy into was looking for the weekly higher low. It was there. We sold a lot of puts in the Discord group in this area. We made some decent profits on Micron, and now we're just looking to ride some of these swing trades higher. Micron, in my opinion, is still, it's one of two things. It's either selling puts or it's leap call contracts. Short-term trade, you're a bit late because the take profit area, I mean, the entry was in this zone. Take profit is this zone right here. So you're a bit late to the swing trade party, but longer term leap call contracts or longer term shares, because the company is still fairly priced, I am a decent fan of as well. I think that's pretty much it. I mean, talking about NVO, I've talked about this one a lot. Yes, the valuation is super cheap. Yes, it could be a nice opportunity, but you're going to have to wait a long time, guys. If you're going to want to see the progressive expansion, right, you're going to have to wait a long time. But it's a decent company. You got to have a long time horizon for recovery. I don't doubt that it's possible, but it will take a very long time. MP Materials, it is an interesting play. This one, for me personally, has ran way too much. It's way too extended on the monthly timeframes, way too extended on the weekly timeframes as well. Super overbought conditions, but you can find some sympathy plays here. Talking about quadruple UUU Energy Fuels, backtest down here, $8.50 to $8. These are plays, guys, that we're just looking for potential other sympathies to MP Materials. if these plays, because the Trump administration has said that they have no problem financing or subsidizing some of these critical minerals companies, it's just we don't know which ones are going to be. Two of the top companies in the running are UUU and this one right here, USAR. These two companies can be good lottery trades. You position, but you position small. You're not too sure when the news is going to come, but could be decent types of trades to accumulate at the respective support levels. UUU, looking for a backtest maybe here, $8. I'll position with more. An easy way to do this is selling puts under these to possibly be assigned and then ride some shares. Or you can go with the YOLO call options well above the market, but go small. The trade might happen or it may not happen, which is why you got to position small. USAR, same thing. $20 leap call options, not a bad option, but you got to keep it small. And it has a weekly uptrend right now. If you backtest down here, talking about $13, $14, $12, decent area. Sorry, I don't have a box, but you can clearly see that was your prior resistance range. A backtest could be an interesting area to maybe build a couple more positions. That's how I play MP materials, indirectly, going for the sympathy plays across the board overall. That's pretty much all the ones that I wanted to cover for you guys in today's video. I know there's a lot more on this list. We'll try to get to more of them over the course of next week, of course. That's everything for your biggest gainers and losers of the day. Now the portfolio. Now I only have a few minutes to cover the portfolio, guys, because there's no way I'm making this video an hour and 40 minutes long. We'll cover it very briefly. So in terms of the swing trades this week, the wheel trades, a lot of these were in the top 5, guys. You can see I played Fortinet after their earnings. Fortinet is the wrong price right here. This should be let me just go back and check. Sorry about that. I screwed up my own weekly recap. Fortinet was a 65 strike. So I don't mind playing Fortinet after earnings, right? But once again, I was saying you got to target the bottom end of the support range down there. So Fortinet, I won't adjust it right now because it'll take too much time. Apple, AMD, they were on the top 5 options list, just looking for pullbacks. They played out well. SOXL has been a recurring one that I do every week. I tell you guys, because the SOXX is pulling back into its relative support range, I'm targeting SOXL, short puts, $21, $22 range, and I will keep doing that trade every single week as long as they keep offering it. Now, moving on in, I'll show you the portfolio afterwards. Moving on further, new holdings. This one has earnings this week, so be careful. New holdings, I like this one. $12 was support. I played a short put. It played out nice. This one now has earnings, so you may want to wait until they divulge earnings to further position. And Airbnb, another one that I brought up last week in the top 5 options play. After earnings, to watch for it, right? After earnings, very strong, coming down to support. I will be looking to sell more puts on Airbnb in this area down here. Clear area of support, at least it has been for a better part of the last 3 years. We covered their earnings. Company is fairly valued down here, sub 120. So I'll be looking for the mid-teens, 115, 114, 113, try and position for some short puts on Airbnb. All of those trades, very logical, and we have talked about them before. Now, I did a good job of reducing some of my cost bases on some of my assigned trades. You can see here that from the assignment tracker, we did a couple things with Amazon. We got assigned Amazon after their earnings. So Amazon right here, we have some covered calls, some initial ones that I wrote on Monday for $274 in credit, and some that I rolled forward for August 22nd, midway through the week when it crossed my strike price. My total break even right now on Amazon is $213.36. So we're making a decent amount of money on Amazon right now. Sentinel One, we got assigned as well, some shares at 17.5 with a break even of 17.25 because we received 25 cents in credit. I'll continue to play this one down here, continue to play the wheel, and I'm not opposed to adding another contract down there at around the $14, $15 range if the market does offer me that opportunity. And the last one, Chewy. We got assigned on Chewy a few weeks ago here at $37 with 18 cents in credit. We rolled covered calls a couple times. Our average cost on Chewy now is $35.72. I currently have covered calls right now at the 36.5 range. I'm just looking to get out at my near my assigned strike price, as Chewy's price action is not too bad. It's just big weekly consolidation, big monthly consolidation, nice monthly uptrend. You can see that we're coming back and perfectly testing the lower $30 range, 34, 33. Nice monthly upswing right there. Sorry, the chart's maybe a little bit too small for you. Maybe you can see that a bit better right now, right? Nice monthly price action, possibly going to embark on another monthly upswing. So potentially being able to get out of this trade soon, right? And then we had a bunch of earnings trades. You guys know my earnings strategy, right? Is just playing 2 standard deviations away from the expected move. It worked out well for us all throughout the week. And then we got hit with a 4 standard deviation move on trade desk. The odds of that happening are super tiny. It is what it is. We unfortunately had to take like a $600 loss. So not only does it erase all the earnings gains that we made this week, but even a lot of the earnings gains we made last week, which is why I always say playing earnings is a casino. It can help you with the ROI over time, but sometimes when you get hit with one ridiculous trade, one ridiculous loss like this, it undoes a lot of the profits that you may have made during the earnings season. So that was our biggest losing position of the week. However, the portfolio is doing just fine. You can see right here from the portfolio, everything is in check. So we went over a lot of the assignments right here. Nothing to see there. In terms of our long call options, the affirm call option is still up 86%. I gave a take profit criteria on this one for people in my group who had multiple contracts. This one right here was up over 2x earlier in the week. It was up 111% overall. So fantastic entry we got on affirm a while back. There was a take profit criteria on this one. You might see this one too. I DCA'd my XLV Leap. That was very strong. We got an entry of 1225. Now I have 2 contracts. We also still have a TLT calls. I haven't added to them. Rocket Mortgage still looking good, up 114%. And KWeb just kind of oscillating slightly above break-even range. The short options that I still have, a lot of them are covered calls, like the Amazon, the Chewies, the Fiserv, but some short puts that I have, BITX, same trade I told you guys about earlier on in the video, targeting the prior all-time highs of Bitcoin, the support range, 110, 108 type of range. That's a 54.5 strike on BITX. We also have Figma, 55 puts. I got 0.5% for the week. This is 30% away from the market. That's how I like to play these. I have a HIMS short put at 38. Very good distance on HIMS, guys. That would be like a 20+% sell-off on HIMS. We also have SMR, the 32s, and here's how I'm playing USAR and quadruple U's as well. So we also have a couple of swing trades here. Some of them I added to. I added one ASML contract to these bull call debit spreads. A lot of them are currently still lagging the market, but we'll hold and see what happens. And all of our leap call options, Micron, Google, and Amazon are really carrying the debit spread portion of our portfolio, being the extended leaps. That's all I had for you guys in today's video. Hopefully you guys enjoyed. If you did, drop a like, subscribe to the channel, and if you have any comments, answer them down below. That's it for me. Kept it under an hour and 40. Sorry for wrapping it up super quick. Take care. See you tomorrow, and peace.